I have a pleasure to, 10 minutes, I was given 10 minutes to tell you something about SPAC, which stands for Special Purpose Acquisition Company. Probably quite self-explanatory name, but let's see. We consider it quite an interesting and innovative way for companies how to raise capital and going public. It's been quite a hot topic in recent years, surrounded by both positive and negative sentiment. So let's get a closer look at it. Maybe firstly, let's take a look what we are even disrupting by this. Traditional IPO process, how it looks like. If you are active in financial market, you might be more or less familiar with this. It basically starts with a company that wants to go public, hiring investment bankers, and they lead you through entire process. They help you with filing prospectus, setting a price, you make a roadshow, trading starts, and then investment bankers can provide you with some post-offering support like research support, price support, etc. Nothing against, you know, there is a reason why this process has been established in the market, has been used for so long. It just works well, yeah, of course, but one size usually doesn't fit all, and there are some issues with it. Firstly, it takes usually too long. I mean, 10 to 12 months is not extraordinary time for this, and it's kind of annoying because it doesn't allow you in such case to take advantage of good market sentiment time periods. Imagine that you start IPO process and in the middle of it, after 5 months, a war starts, for example, you might be in a trouble. Secondly, it's also administratively pretty demanding, which might be kind of annoying, especially for smaller companies. And there is also a conflict of interest if it comes to pricing, because what investment bankers usually do, they often guarantee you some price. Therefore, they have interest to push it as low as possible because they might end up with the stock on their book, so they mitigate the risk this way. Yeah. Of course, they charge you a fee that is usually not too low, so we have legitimate questions. Some people may question, like, is it worth? Isn't there any better way? Isn't there a way how to bypass investment bankers? Well, there are some. And here we go with SPAC. It might be one option. The process looks a little bit different. It starts with sponsors setting up a company. And they usually put some initial capital in, they lead the project, they take the risk, and as a reward, they obtain some stake in the company that is actually higher, proportionally higher than their cash contribution, which causes dilution of the other shareholders. Yeah. Then they list it, they raise money, they list it as a shell company. It's nothing. There is no activity, just money prepared for the target company. So we have shell company listed with a lot of cash, and usually after listing we have 24 months to look for appropriate target company. When it's found and deal is done, it has to be approved by shareholders, and eventually it's acquired, and by the acquisition the target company becomes publicly listed company. What is nice about it is that it's from perspective of target company, it's much faster, it's more certain. Even if a war starts, the money is still prepared, because remember, the money is raised in advance, so it's prepared regardless of any other market circumstances. It's usually administratively less demanding. Cost-wise, it's also usually cheaper. On the other side, of course, you need to make it attractive also for investors. There are some good points about it, but it's also fair to say that there might be conflict of interest between investors and sponsors, because we will get to it a little bit later, but for sponsors, usually a bad deal with bad target company is better than no deal, which creates kind of conflict of interest. Yeah. If it comes to legal challenges building it, we faced quite many, actually. I find it senseless to go to detail now because of the time constraints. Unfortunately, it's not possible. I am Happy to discuss with anyone interested afterwards, maybe. It's it's a little bit like if you are a scientist and you want to invent a plane, you need to put the plane in accordance with laws of physics in order to make it work. If you are a lawyer and you want to make the SPAC work, you need to put it in accordance with laws of Czech Republic and European Union, and these laws do not count with existence of SPACs whatsoever so far. So we can discuss which task is harder, but the toughest point was probably the last one when we had to explain all the public authorities our intention. They usually it's first time they hear about it, so you need to explain your intention that is legitimate, that is good for investors. You need to advocate it, and even if you have like very precise theoretical legal argumentation, there is always some gap between law on paper and law in practice. In practice, you usually have to persuade specific people about your intention. Otherwise, you usually fail. Yeah. What is the conclusion about it? Is it gonna really disrupt traditional IPO process? Well, I don't think it will remove IPO process. It will be still here for some time at least. But I think that for some companies, it might be quite viable option. When I mentioned negative sentiment regarding SPACs, especially in the US, I think there were two main issues. Firstly, we can discuss that sponsor usually got stake around 20%. We can discuss if it's too much, the dilution is maybe too big, so maybe it will settle down on some lower level. But more importantly, there were usually no link between, I already mentioned that conflict of interest, there were no link or almost no link between profit of sponsors and profit of investors. We were aware of it in Wooden Company, and how we solved it is that we lowered the stake to 14%, and more importantly, we linked it to performance of share price, which means if sponsors choose bad company, whose price goes down afterwards, sponsors do not make money. So, and otherwise, if they choose good company, share price goes up. We earn money, and how we did it, we created two classes of shares: sponsor shares that are not publicly listed, and investment shares that are publicly listed. And in order to be able to convert those sponsor shares to ordinary shares, the price needs to go up. So this is how we solved it. Let's see. I am basically coming to the end because Jaroslav is quickly coming here to kick me off the stage. So I actually think that the conclusion is that these two types of going public, it may coexist next to each other. Maybe SPACs is more convenient for smaller companies, traditional IPO for bigger companies, but some rules and market practices needs to settle down, and that's it. I thank you for your attention.